Welcome back, everyone. This is Your Money Matters. I am Angela Giroux, publisher of the Bauman Letter, and joining me is Clint Lee, our research analyst. Hi, Clint.
Hello, how's everyone?
Now, obviously, Ted is not with us this week. He is on vacation, lucky guy. But we still wanted to get to you because we have some exciting things going on this week. Before we get to that, as a reminder, if you want to find out more about the Bauman Letter, if you'd like to join, there's a link below that'll have more information, including, most importantly, how you can join us risk-free. Now, the big news this week, and it's something we don't talk about very much, Bitcoin. It zoomed past 20,000, hit new highs. Right now, as we record this on a Friday, it's hovering just below 23,000. So Clint, I'm going to ask you, what is going on behind the scenes? What's the story on this rally?
Yeah, sure. I mean, Bitcoin, I think, just this week alone, this past week has tacked on about 25%, and that's on top of an incredible run that's already had. And, you look at what catalyst this week came out for Bitcoin, and it was definitely the Fed. You look at the Fed and what they did for their last meeting of the year on the surface, it didn't look like there was much there. They kept rates at zero. They didn't change the size of their asset purchase program, so that quantitative easing, they kept that at 120 billion. Some people thought they might change the composition of that program, meaning they start to buy longer dated maturities, but they didn't do that. But what they did was they changed just one sentence in their statement, and that has huge implications. And what they said was that this asset purchase program at 120 billion is going to keep going until they make substantial progress toward their employment and inflation targets. And here's why that's incredible, is because they're targeting a 2% level of inflation. While based on their own projections, they don't see inflation even getting to 2% until 2023. So there's a little bit of ambiguity in that statement as it pertains to what substantial progress means toward those goals. But nonetheless, I mean, that gives them quite a runway for the foreseeable future to continue these purchases, once again, at 120 billion per month. And that's significant because that's on top of what other central banks are doing as well. I mean, Europe's central bank just came out the other week, and they're expanding their bond buying program by about $600 billion. Japan has another $700 billion stimulus program that they're going to enact. And this is on top of, the mountains of QE that have already been done. I've got a chart to show that. This comes to us from Axios, and this just shows the major central banks around the world, what their balance sheets look like. So when these banks are doing quantitative easing, they're just basically creating new money to buy, for the most part, government debt securities. And going back to this, this goes back to 2007. But just look 10 years ago. I mean, this was in the aftermath of the financial crisis when all this QE really began. And I mean, the cumulative amount of these balance sheets grew to 5 trillion then. And this is in trillions. You go to 2020, the start of 2020, even before the pandemic began, and the value of these balance sheets stood at about 15 trillion. And then you look at this forecast of the impact of the pandemic, the impact of all these bond buying programs to combat the economic effects. And we're expected to see the total value of these balance sheets over $25 trillion at the end of 2021.
All right, so let's take a step back and let's look at really what this means for the markets. And obviously we can't ignore what this means for the dollar.
Right. Yeah. I mean, you're basically the Fed is flooding the market with a new supply of dollars. And there's a couple other things that's going to happen with this as well. I think one thing is that even though they didn't up their bond purchases and they didn't change the composition, it helps keep a lid on interest rates nonetheless, because of how far in the future this could keep going. Because of that, if they're able to cap interest rates, that helps support stock market valuations here. So maybe we can, you see some calm in the markets, even maybe some further upside from that valuation support. But then, I mean, the big impact that you've seen in the markets this week has been with the dollar. And then that directly ties in to the point you're making at the beginning about this run in Bitcoin that we've had. And that's because the dollar's continued to weaken, and it's really just picked up the pace. And I'll show you a chart, what I mean by that. And this is a dollar index. Over the last 6 months, you can see for a while that 92 level was really key, and then that gave way just here over the last month or so. But then, just recently, we've seen that downside accelerate once again. And I think that's obviously the impact of the Fed coming out and saying they want to keep creating $120 billion every month. Once again, there's a pretty long runway on that.
All right. So the question always is, how can we benefit from this? And I think from there, let's circle back to Bitcoin and take a closer look at that.
Yeah, I mean, when these balance sheets have gone, central bank balance sheets have gone from 5 trillion to 25 trillion, you start to look at sort of those scarcity trades, those trades with scarcity value. And I think that's a big reason why Bitcoin's had a surge. I mean, Bitcoin's getting a lot of attention from institutional investors now who are kind of incorporating that into their mandates. There's more, digital payments companies that are using Bitcoin. So there's a lot of tailwinds there. But I think a big part of this surge lately comes from the scarcity value. You can only, in theory, create and mine so many Bitcoins. And so here's a chart of Bitcoin, and this is just going back for the last year. What I wanted to highlight was, even before we had this most recent surge, I mean, Bitcoin had been trending higher. It broke out of this base that I'm highlighting with this green shaded box where it traded sideways for a couple months. But since that time, Bitcoin has gained over 100%. Once again with that 25% surge just this week. So if people are, so that's one example of that scarcity trade. But if you're concerned about how quickly Bitcoin has risen here, if you feel like you've missed out, there's other scarcity trades that you can look to as well.
Bitcoin is not for everyone.
Yeah, I mean, I would go, the old school scarcity trade, I guess, would be gold and silver, and I like silver in particular here. And there's some similarities into silver setup that I see, with what we saw with Bitcoin. And so here's a chart of SLV, the silver ETF. And, coming off the March lows, silver, at least this ETF, more than doubled. But then for the last 5 months or so, it really hasn't gone anywhere. It's traded sideways. But that's actually a good sign. It's consolidating those prior gains, and it's setting up for the next move higher. And so similar to that trading range, that consolidation that you had in Bitcoin, I think silver is going through the same thing right here. And we're starting to see some early indications with, the bottom panel on here is that MACD. It looks like silver is in the early innings of starting a new uptrend. And so what I would look for is a breakout of that trading range. And once again, silver also kind of a play on that scarcity value where we're seeing those benefits. One other trade that I've been looking at lately that kind of ties back into what's going on with the Fed as well. And, I mentioned how interest rates are capped. I think the combination of interest rates with, what we're seeing with surging COVID cases, new lockdowns, the vaccine is not going to be widely distributed for a couple months now. So I think it's setting up a near-term trade, at least, to get back into some of these stay-at-home stocks, these momentum names. One stock that came across my radar in particular was Amazon. Amazon looks like it wants to start a new uptrend right here, at least over the near term. But if you don't have, the $3,200 or so to pick up one share of Amazon, there's other ways to play sort of that theme, and that's with the momentum ETF. There's a momentum factor ETF, MTUM, and here's a chart of it going back for this year. And you can see we had sort of this resistance that I'm highlighting with this green trend line, and we've recently we broke out of that resistance. We successfully tested that and turned back higher. You're seeing a similar setup with a lot of these stay-at-home stocks. And a lot of those are held in this momentum ETF. It's another way to play what's going on in the market in the aftermath of that Fed announcement.
All right, now I'd like to, jumping off script here. I want to go back to Bitcoin because it has staged such a huge rally, and we've seen it do this before. And I saw one analyst was calling for $40,000 for Bitcoin. Do you think this rally still has some room to run, or is it too late?
No, I think the rally has room to run. I think you need to pick and choose your spots. If you kind of take the longer term view Bitcoin, you take the charts back and you'll see we're starting to break out to new highs, which is a very encouraging sign, just as that longer term momentum's picking up. The reason I say you want to pick and choose your spots, I mean, we had a 25% surge this week. It's more than doubled just over the last few months. And so I wouldn't be surprised if Bitcoin needs to take a bit of a breather here, at least over the near term, and consolidate some of that. But longer term, the charts look constructive. And, once again, we're seeing the institutional interest and interest from other digital payment providers coming in there. So that's going to keep those tailwinds at least in place.
All right. Well, this serves as a good reminder for those of you watching that if there is a topic you'd like for us to cover, please make sure you leave it in the comments or email us at baumandaily@banyonhill.com. We do read those comments. We do read those emails, and we do want to give you what you want to hear about. So thank you, Clint, so much for covering this for us. And thank you so much for watching. Ted will be back next week. Thanks, everyone.
Thanks.